Alright, so we are making a restream. Today we made some of the video regarding the issues related to stock market, crypto and trading ideas. However, some of the audio problems has stopped us from publishing this video. That's why we are repeating that procedure. So the way to end up 1 million using the stock market, is it to invest 10 million into it? Is it legit? Not really. And please don't talk solely about Bitcoin and gold, as those are the investment vehicles that are not faring very well during financial crisis that right now and not preferring very well. So I will show you today what to do right now regarding the elements that I just prepared. So without further ado, we are getting straight into a point. At first, let's head into we can find that right now the Mrs. Daily has delivered her point of view regarding recent headwinds in the economy, and we can find that during the symposium on Asian banking and finance, she said not to tip unnecessarily the economy into a downturn that actually influences the full employment, and for her it's a struggle. So that's a contrarian view to Atlanta's Fed President Bostic that recently told that they are still creating lots of jobs on a monthly basis. Therefore, he thinks that the economy will absorb Fed's actions. But those views are more or rather less likely to occurring right now. That's why many more of Fed's representatives are rather tipping into the position where this recession won't be unavoidable. And as I would like to ask you, just write it down in the comments, roll over your expectations. If we manage to move along without seeing inflation, will we manage to move along with this inflation to go down without putting the labor market under some problems? So for me, however, this truly stunning point of view where many market participants still claiming that we are still far away from crisis, and for me that points are detached from reality. The question rather is not whether it happens, but how strong it eventually happens. So for now, I would like to present you also the graphical representation of the relationship between unemployment and the job vacancy rate, the number of unfilled jobs expressed as a proportion of the labor force. And the current relationship between job openings and unemployment, depicted right at this beverage curve, suggests that the equilibrium level is actually about 5%. And that's what happened back during recent crisis, during dot-com bubble or the global financial crisis. So it's still something of the conditions that may deteriorate inside of which this recession may be unfortunately enriched with. So this implies a much higher unemployment rate that would be needed to significantly reduce inflation. Global financial stress indicators showing that we are at the levels unseen before since 2009, not counting the recent slump during this pandemic shutdowns. So it's a composite index that measures the degree of financial stress in an economy, and right now is pointing that we are in a very much of a difficult scenario. Energetic war holds on. Severe damage to 2 gas pipelines from Russia has turned out, due to the point of view of Chef Joseph, Block's foreign policy chef Joseph Borrell, turned out to be deliberate. So European Union is about to take more steps to bolster its energy security, but those problems may persist for longer. There's not really many of signs that it will go away, as this battle between West and Russia is getting just more fierce. So current difficult circumstances already pushing Europe to energetic resources rationing, but that might not be sufficient. Europe need to be praying for a warm winter, and those requests made to the god seem to have been answered, as this winter seemed to be more mild than previous similar seasons. So that's kind of a consoling fact, but nevertheless the energy will be necessary. If a highly indebted developed market doesn't lose their fiscal policy and maybe print money, they will get in the midst of an energy crisis, and that would risk having the disbalance of what emerging markets had with payment problems. That's why this winter, or the spring, might be the time of loosening. It's another fact that stays in favor of loosening fiscal policy this year, or the early season of next year. Right, so we are jumping to market outlook, and for now I would like to have a look at positioning. And instead of positioning, you may find that number of clients that are betting for growth in SPX and Nasdaq is predominantly higher than sellers. So for me, it means that at least in this shorter time horizon, we are bearish, but we need to observe that recently this positioning in a shorter spectrum of an issue is downside. So many of investors in a longer horizon are positioned to the downside, however in a short to the upside. So we may see a kind of a V-shape correction from here on major indexes. So the CMC is the one of the sources that I'm taking this data from. In terms of crypto outlook, let's have a look at BTC correlations with risk assets that some claim beginning to break. NUPL is at 3 years low. Previously, such gauge has pointed that low levels back in 2019 during this, I would say, crypto recession or bear market, or whatever it is named. So if we just look at the NUPL, that is the factor determining whether the network as a whole is currently in a state of profit or loss, we may find that there might be seeking for a bottom has started right now. So right now cryptocurrencies are holding above its June low, and we are on NUPL above those low levels, but unfortunately for the broader spectrum, we may find that still we are a couple percent over those 2018's bottom. So that's currently giving me rather bearish outlook, but with this one there are many of market speculators that are expecting that with this bottoming process we might be looking for I would say dissectioning correlation with stocks. So with this one, with that much suffer on the market, we may find a possible reversal, but I don't really find it yet, as Bitcoin in some terms might be considered as a child of low interest rate policy, and that's why we don't know what may happen next during this quantitative tightening still developing, and also much of the other economic data been deteriorating yet. So it's very difficult to assess what to expect when somehow global financial crisis may occur once again, or something alike. Is it better version of AWS? So I have for you some of the news out of the crypto market, to be exact from altcoin that's named Filecoin. It's a business policy, and its business model is very interesting, as it enables users to buy and sell computer storage on a system for decentralized storage of data and files. So we could use those data out of the cloud, and that would be somehow of a feature of AWS. And the feature that is about to also be delivered early 2023 will be named Filecoin Virtual Machine, and it will be software platform or virtual computer that would be used by developers to create decentralized applications based on a Filecoin network. So could we really overcome the solutions made by AWS? Definitely there is a demand for that, this decentralized storage network, but it still takes time to make it fast and usable to the extent as Amazon's solution is. Market movers section, and so we are, as always, jumping into economic calendar. Just find out whether everything is all right. So right now let's have a look at the calendar. So recently on Tuesday we had new home sales. New home sales has expected to get at around 0.49 million. However, it surprised to the upside and turned out to get much better, beating expectations, and gives us hope to return to this previous trend of an upside new home sales being delivered on the market. So it's the biggest increase since June 2020, and it means that the home sales still performing relatively good, but that unfortunately might not be easy to persevere as those economic conditions are deteriorating. So that's from Tuesday. Let's have a look at the next data. We have had on Wednesday already GfK consumer confidence that turned out to be lower than forecasts from Germany, and goods trade balance that returning slightly to normal. Pending home sales. So yeah, that's goods trade balance showing that supply chain issues are fading away. Pending home sales looks however worse. So new home sales are getting better, but pending home sales are eventually worsening. That's why this lagging indicator that home sales is nothing in comparison to pending home sales. That is more like a leading. We are expecting today Fed Chair Powell speech, or we already through this, but we are expecting Fed Bowman speech and Dingra as well as Evans. On Thursday, we have inflation rate from Germany and GDP from Canada, as well as GDP price index from EU as to watch. All right, so we are jumping right now to a another section that is market movers. So on market movers, to trade idea, and within this one, I would like to show you interesting chart for me of recently. That is a Australia 200. Right now, it's gaining some power to rebound. However, recent structure has shown a kind of a bearish outlook. If you just manage to find out what's happening over Australia right now is in terms of PMIs, that is a leading indicator for the economy right now. So that's of 2021, but PMI on, yes, that's it. Trading economics right now, PMIs are deteriorating very fast. Also, new home sales are dropping. That's why I do find that those difficult conditions may persist for longer. So for me, that means that Australia 200 is in a possible nice spot to take a bearish bet. However, we are rebounding, correcting this recent price down, this recent move down, and the possible reversal may be found around 6,500. So this is where I do expect this price to revert eventually. All right, so if I just would make a bet against Australia 200, that will be something like here. To the extension of those resistances. So Australia 200 right now is rebounding out of this double bottom formation, and normally in a double bottom formation, if it would be successful, we would need to find kind of a formation of a lowest shadow or long green candlestick. That would mean a stronger, firmer rebound. Right here we've seen a indifferential, and that means that this recent candle hasn't been negated and given its room for moving downwards in a further time. However, we need to make a correction to squeeze those shorts that have accumulated in this shelf. So as I mentioned, risk reward ratio that time is at even 12.5 if you lead this trade correctly. So for me, that's it out of this episode. Thank you very much for watching, and see you tomorrow, 8:45 exact CIST time.